Yeah, we never really know where to go. But what's so interesting to me about where we are today is that there has been this huge mind shift from inauguration day to today. So, coming into inauguration, people were fantasizing wildly about where the markets were going, where the new administration was going to take the economy and the markets. And since then, investors have had to come to grips with the fact that there is, without question, a shift in behavior out of Washington where President Trump is behind the wheel. And so investors are used to being in the passenger seat with specific companies, with, next to CEOs for good and for ill. But now they're having to look at their entire portfolio and decide, are the investments I'm involved in going to be beneficiaries of the new administration or victims of them?
It's just so interesting to hear this because I think there's this narrative that emerged following the first Trump administration that this is a guy who looks to the Dow and the S&P 500 as a scorecard, as a sort of report card. And indeed, during his first administration, he touted numbers there, yet we've heard a different narrative emerge this time, Peter. Do you buy it that he's not paying attention to the stock market?
One of the things we know about President Trump is he loves to cite metrics that work in his favor. So I'm not surprised with the markets dropping that he's looking for alternative measures of consumer and satisfaction in the economy. But I think at the end of the day, what he is trying to demonstrate more than anything else is that he and he alone is going to dictate economic policy, American diplomatic policy, and that everyone else needs to come to grips with that.
But is there a point, yeah, no, it's interesting, Peter, because how many conversations I've had with folks and they're like, oh, you know how this is going to play out. It's just like, you reported on it the first go round, and it feels so different. And I think so many people are realizing this is different this time around. Having said that, is there a point, a breaking point, where the team around the president somehow has a bigger say, like they did in the first administration? Because right now it does feel like, absolutely, like you lay it out, the president's in the driver's seat and everyone is there in the back seat to back him up.
Yeah, one of the things that I say to my students is falling confidence, individuals grow spines. And so what we're likely to see is that should the markets continue to drop, should consumer confidence continue to fall, those around him will feel compelled to react. Whether that's sufficient or not, we don't know. And to be fair, Carol, there are a number of organizations and individuals who feel wildly empowered now. And so we're in this interesting moment where individuals and organizations are having to decide in which camp do they expect to fall. Because one of the things we've seen with dominant leaders such as Trump is there are clear benefits and there are also clear punishment.
Well, how do you advise people to weather this storm, if you indeed think it is a storm? Because there are a lot of people we talk to, Peter, who say, okay, wait a second. Once he gets tax cuts figured out, once we get to April and there's more clarity when it comes to trade, things will become less volatile. What do you say to that?
So I think that investors have to be thinking, I say a lot, plan for what you can imagine, but be prepared for what you can't. In this environment, investors and corporate executives need to have two playbooks at once. One is in anticipation of things going in their favor, but also a very clear playbook for if this goes against me, what do I do? What are my preparations planned ahead in anticipation of that? because
Is
the outcome here is going to be very binary. And that's what we see over and over, is that when you create beneficiaries and victims, the vulnerability that comes from the victims sets things in motion. We're seeing that in Europe right now, where the geopolitical vulnerability has leaders on edge and they're mobilizing in response.
I'm going to ask you something crazy, Peter. Is one of the outcomes here, on an investor perspective, that the U.S. becomes uninvestable in your view?
I think that is a clear possibility. I think that investors have to be made comfortable that the United States is interested in foreign capital, in retaining domestic capital, and appreciate, Tim, that if you look at labor, goods, and capital, we've already seen restrictions and walls go up on the immigration front. We're seeing tariffs creating friction in terms of the mobility of goods. It is, to me, only a question of time when capital falls into that same playing field where public policy begins to intervene, and not just in the United States, but globally, in terms of wanting it, not wanting it, hoarding it, pushing it away. Those are completely in sync with what we're seeing with labor and goods.